Thank you so much, Matthew, for joining and being a part of this special interaction on 3.0 TV. Since we are discussing about markets and the road ahead, we have seen 64% upsurge in Bitcoin since the time the US elections, since 2024 US elections, fueled by optimism in the exchange-traded fund. A lot of corporate treasury buyings are there. There is a trend that has shifted. So according to you, what's your opening remark, Matthew, on that? Because there are a lot of investors. They have to have these kind of portfolio, or maybe they are looking for such kind of shift. What are the common mistakes one should avoid before making a robust crypto portfolio heading into 2025 or beyond that?
Well, I mean, looking at that, it's good to look at the academic literature and background on investing in general. So I look to Markowitz, who's actually a Nobel Prize winner, and he basically propounded the idea of diversification is the best way to protect against sudden moves in particular assets. So many different assets. What he proposed was that within a portfolio, people should hold as many uncorrelated assets as possible. Now, clearly, Bitcoin is in cryptocurrency is a brand new asset class. Bitcoin is very different to many of the other assets out there. And it's actually been on quite an evolution since it was originally a totally speculative asset, and now it's becoming more and more of a store of value.
Fantastic.
So initially, we started out in what I would call the retail phase of adoption, and that was really 0 to 69,000, which took quite a few years. Then we had that big pullback towards the FTX low, if you remember, 15,500 about for Bitcoin. And then following that, I think we've begun the institutional phase of adoption. And I don't think that is fully in place yet. But as you said, from the beginning of the year when Trump was elected, we got a bit of a change there with all the positive regulatory developments that we've had in the US. And also the ETF, as you've said, has pulled a lot of money, institutional money, into Bitcoin in particular. So I think there has been a big change, but the big key to it all is always remain diversified, never over speculate really into one particular asset, because nobody knows the future for certain. And it's important to not put all your eggs into one basket, to actually spread your eggs into different asset classes.
And
so, for example, if Bitcoin does get a pullback, then you can rely on other assets for the
So which other assets,
portfolio.
Matthew, do you like apart from Bitcoin?
Which crypto assets do you mean?
Exactly.
Yeah, I mean, I'm a big favorite of Solana. I think Solana is the retail chain of choice. It's had massive adoption with all the meme coins, of course, but it's not just about meme coins. Solana is an amazing, has amazing performance metrics in terms of, transactions per second. It's really, really fast. It's really, really cheap, and it's really, really secure. And they have an ongoing program of improvements and upgrades within the Solana blockchain.
Fantastic.
So I think Solana is a great one for the future, but a couple of other ones which I think have a great future ahead. I like Toncoin. That's the one that's linked with Telegram. I think that has a great potential. Of course, we mustn't forget XRP because of its links with potential banking and efficient banking and money movement, reducing the costs there and transparency, etc. So there are a lot of tokens out there that we need to look at. And obviously there are more speculative ones that we can look at as well, but they're the main ones that I really like.
So since Matthew, you have spoken about what are the trends that will likely influence the market going forward. So there are a lot of predictions that are happening around Bitcoin. As we speak, in the last week, the Coinbase premium which is considered to be a proxy for US investors has turned negative, which is the premium for Bitcoin in the US versus the Binance exchange. So what's the trend you are picking up on the Bitcoin price predictions? And Standard Chartered has already seen Bitcoin near $2 lakh. So what are the three important factors that will take Bitcoin to that level, or you have a different idea about it?
I've got a slightly different idea. I've been a trader since the early 1980s. I've lived through market crashes, the 1987 market crash, the 2000 dot-com boom and bust, the 2008 market crash, and I learn a little bit more each time round. And the thing is, when people get particularly enthusiastic about an asset, or particularly greedy, we could say, because there's a fear and greed index. And when people get to the extreme on the greed side, and they're all talking about Bitcoin going up higher and higher and higher, that is this time to start to be a little bit nervous and a bit cautious. And people tend to get, the fear of missing out, the FOMO effect when they get to these highs. And I think we need to be cautious and remember that Bitcoin is just another risk asset. Yes, it's got some amazing characteristics, not least the fact that it's got limited supply, 21 million maximum supply it will ever have. So, and we're near that maximum now. So that's really important because obviously they keep printing US dollars, massive money supply there, but Bitcoin is a fixed supply. So it does have real potential, but we have to bear in mind it is a risk asset. When the market pulls back, Bitcoin pulls back. When Trump imposes tariffs, Bitcoin pulls back. So it is sensitive to economic conditions. So we need to monitor ongoing conditions, particularly in the US. They say when the US sneezes, the world catches a cold, or is it the other way around? I don't know. But it's very, very important to watch macroeconomic conditions because this will affect Bitcoin. So I watch as well, I do a lot of technical analysis, and I think we're getting close to a potential short-term barrier maybe, but certainly an overhead resistance for Bitcoin, which will be a challenge to break through. Now, we can break through that and we can go much higher. But all I'm saying is we need to monitor and stay alert to potential stimulus, outside stimulus that could affect the price.
Matthew, you spoke about the world catching cold. So let's prescribe some medicine for our viewers. And in terms of, how can investors protect themselves from a psychological side effect? You also spoke about a FOMO. Let me give you an example about what's happening. There is a sector rotation which has been witnessed in Bitcoin. People, they invest in Bitcoin, it goes up, profit taking happens. Then Ethereum is the second target. Then we come to XRP, Solana. We have also seen a huge surge in Binance BNB and Hyperliquid as well. We have also seen chronically depressed sectors such as the NFTs gain traction. How do you see this in this ecosystem building up? Because if you are witnessing FOMO, and there are chances that you can falter. What is your view on that?
Yeah, I think the important thing to recognize is, as I say, Bitcoin is actually an evolution from when it started back in 2009 as a totally speculative asset. It only had retail adoption in the early days. In the early years even, and now we have that institutional adoption. And that institutional adoption is now spreading, of course. We have the Ethereum ETF, and there's talk of other ETFs, as you mentioned Solana, you mentioned XRP and so on. So this is the institutional phase of adoption. And so that's why money is being pulled out. It's being sucked out of all the more speculative assets into the big players. And yes, the what they call the altcoins have been suffering quite a bit. They're not reached their previous all-time highs, whereas Bitcoin has. Ethereum's not there yet. Ethereum is actually my least favorite of the main coins because I think there are a lot of competitors coming up that can do what Ethereum can do, but probably more quickly, more cheaply. I mean, I did a transaction this morning and I had to wait quite a bit for validation of my transaction. So, and there are others that do it almost instantaneously, like Solana we mentioned. So, I think that we need to watch what the institutions are doing, watch what's happening on the regulatory front. And, the meme coins, we need to be very, very careful about meme coins because obviously they have no utility behind them. They're purely speculative. And we saw that, of course, with Trump coin, and we've seen it with other meme coins as well. With NFTs, they've fallen very much out of fashion, and we have to look at what is the current narrative. That's the real, we talked about fear and greed, and what are people getting greedy about, and what is falling out of favor at the moment. So that's what I do at eBay Ratings, actually. We try to rate different cryptocurrencies and identify which ones have true underlying value, which ones have real potential. And you can look at, whether it be short-term, medium-term, long-term. Long-term, I think we can conclude at the moment that probably the safest bet of all is, of course, Bitcoin, because it is now a store of value. It's what people call digital gold.
Exactly.
So institutions are now using it as a store of value because you don't get inflation like traditional dollar. I mean, if you look at things priced in dollars, we see the dollar continually depreciating. And so how can you price stuff in dollars? We need to price it maybe in something that is a lot more stable, which at the moment is actually Bitcoin perhaps, or gold even.
So Matthew, what's your advice to the investors or for those who are looking to invest in cryptocurrencies, what are the mistakes they should avoid? Because we have seen some kind of penny coins that are showing signs of uptick. Maybe there can be some speculation. What is your advice for those investors to stay away from these bets?
I think that we need to look at important diversification, as I've said. I think that you need to look at your personal circumstances, because you only invest what is money that you can afford. I don't like to say lose, because I think Bitcoin is a very solid, sensible investment, but certainly money that you don't need for use tomorrow or in the near future. So only speculate with that sort of capital. But again, I think that you need to spread your portfolio. So diversification is very important. So not only between different asset classes like stocks, like bonds, like property, whatever it might be, diversification that way, but even within sectors themselves, like the cryptocurrency sector, look at diversification, and you put probably more of your capital into the more solid assets like Bitcoin, like perhaps XRP, like Solana. So you put more into that. But still, I think you should have exposure to some of these, what you call penny cryptos, the really cheap ones. Do your research, do your due diligence, of course. So that's another big key factor. Don't just throw your dart in the board and hope, but actually do a bit of due diligence and say, does this token have good, underlying characteristics that I can invest in? So, one of the most, I don't want to go on too much, but one of the most important things that people do, most successful investors I've seen, I've come across many successful investors. One thing is patience, investing in solid assets like Bitcoin and just holding it. But then with the more penny tokens, as you mentioned, maybe just go for a basket of those. You've done your due diligence, go for a few. Some will make it, some won't. You have to recognize some will not make it. But the ones that do, you can get 100x, 1000x. You can get massive potential gains. So it's always good to have a little bit of your portfolio in those ones.
Can you name any, Matthew? If very quickly, if you can just name few.
The small ones that are coming up. Yeah. I'd like to look at my charts, but I mean, one, for example, I like to look at ones that have fallen out of fashion, that have potential. I did mention Toncoin, which is not a small one. It's relatively big, but Toncoin is one of my favorites. Jasmy. I think Jasmy has good, solid fundamentals, and I also think it has the most amazing community that I've seen. It's really underperformed. I think it has potential to get some great performance. This year alone, to the peak, we saw 75% performance on Jasmy tokens. So 75% return on your asset is not bad. We've fallen back sharply now to really important levels. I think there's potential for that to move ahead. So I like Jasmy. There's lots of others I like. I really like XRP. There's news coming out. I know it's not a small one, but XRP, there's news due out soon, which could be really positive. I've read reports that XRP could go from the current around $3, possibly to $10 very quickly. That's a possibility. I actually have traded XRP from when it was just, a tiny token worth next to nothing. Exactly. And it has this characteristic of suddenly jumping aggressively. And I think there's potential for that. So I like XRP.
So from penny tokens, let's shift our focus to a couple of developments that have happened in the crypto universe. I'm talking about $7.6 billion worth of treasury coins were added in the last week of July. Cut to stablecoins, regulatory aspects have pump-primed tokens such as ENA. I'm talking about its stablecoin, now the third largest by the market cap, just after the USDC. So do you see potential in the regulatory aspects, or the stablecoins factor and its utility-driven token will do well from here on? My question to you, Matthew, is what are the best practices of managing and balancing a healthy crypto portfolio? If you can just take us through.
I mean, as I say, number one is diversification. And I think that stablecoins are a fantastic participant within a portfolio, because it just means you can basically stabilize and use that effectively as an immediate switch to cash. Hold a decent amount in stablecoin. But obviously stablecoins as well, it might be worth looking at diversification. Stablecoins, the regulatory improvements recently, particularly out of the US, with the Clarity Act and Genius Act and so on, the crypto regulation moving positively forward is really helpful. Stablecoins have a lot more solid backing now. Stablecoins have actually shaken a bit in the past, and we need to be aware, and that's why even within stablecoins, I personally would advocate probably diversification. not just USDC, maybe USDT, maybe some of the newer stablecoins as well. But stablecoins are a really important part of a portfolio. So I use them in my day-to-day trading. I trade quite actively. When I take profits, I switch my profits into a stable coin, which is effectively then a secure environment to hold my value, really, until I can wait for a better opportunity to jump into crypto. So they're really important, just part of day-to-day trading as far as I'm concerned.
Matthew, you spoke about Ethereum. It takes a while for a transaction to get completed. So which is the other layer one you like and you love to do transaction on? And from here on, as we speak, Bitcoin traditionally has slipped in the month of August on an average basis of 11 to 12% since 2013. Last year, it slipped 8%. So will this trend continue in 2025 or this is the big concern surrounding the crypto universe?
I think that we're potentially nearing maybe a local top in Bitcoin. I mean, as I'm not sure they mentioned, but I actually see a really important level around 126,000. We, of course, have slipped back already quite a bit. We tipped up to 123,000. We fell back to around 112,000 over the weekend. We're ticking back up again now, about 114,000. So we have pulled back quite a bit. I think that we could get a nice little run up, probably from around now, to around 126,000-ish area. I then would expect there to be some pullback. And I look at cycles. I was never really a fan of cycles, crypto cycles, but Bitcoin obviously has its halving cycle. We had the halving not so long ago. We're actually about 1/3 of the way into this current halving cycle. And if you look back at previous cycles, it seems that Bitcoin tends to peak about 1/3 of the way into the current halving cycle. Now we're approaching 1/3 of the way into this halving cycle. So I do think, as I say, we're approaching, then that could mean that we're about to top out, not all-time top perhaps, but we're about to get a local top in Bitcoin. As I say, maybe around 126,000. We're about 1/3. 1/3 of the way actually takes you to possibly October, November time. So that would be a time for me that we potentially might be peaking out in Bitcoin. But I don't like to give future predictions, firm predictions. I like to monitor things as they go. And that's why on 3.0 TV we have regular shows. I contribute regularly to give you the latest updates in what's happening with not just Bitcoin, but crypto and other assets as well.
Well, Matthew, since there is a lot of buzz around the derivative markets, roughly around 70 to 75% volume happens in the derivative and the spot. Which platform do you prefer, Matthew, or you trade on? Which is the best platform, according to you?
I don't like to say best platforms. Actually, a lot of really good platforms out there. Of course, Binance is the big one. Derivatives are massive in terms of, obviously, the opportunity to leverage. And I know some now offer up to 1,000x leverage. For me, cryptocurrency is already volatile enough. I don't think we actually really need leverage, to be honest. And I think when you leverage, you will almost definitely lose at some point.
Fantastic.
I occasionally leverage. The most I ever do is 2 to 3 times now, if I leverage. But even that is highly risky. The other thing is, if you're leveraging, you can obviously potentially go short an asset. That is highly risky with cryptocurrency because we know crypto can get sharp pullbacks and can easily, knock you out of your positions, liquidate you basically. So leverage is good. Obviously, so you mentioned about platforms. There's many out there.
And which one do you prefer, Matthew?
I actually think we should be looking at decentralized platforms. So you mentioned Hyperliquid earlier on. That's a real good one. So centralized platforms, you've got Binance, you've got Bybit are the two big players probably right now. And you've obviously got the others like Kraken and OKX. But in terms of decentralized platforms, I think Hyperliquid has really taken the bull by the horns. And it's good because you remain the custodian of your own assets. So you're not actually giving custody of your assets. With a centralized platform, like Binance, you're giving custody to Binance. Why do that? Why don't you retain custody? Use a decentralized platform.
Exactly.
You've got much more transparency. You can see what's going on. So I like Hyperliquid. And there are others coming up to vie with Hyperliquid now. So that's just probably the first one out of the blocks. We've got other decentralized platforms as well, but Hyperliquid seems to be the latest one, which is taking the world by storm right now.
One last question, Matthew. What are the top 5 tokens you prefer, and you want our viewers to have them in their portfolio? This is not an investment advisory, but a research that will help them make their investment decision better. And are meme coins in that in your suggestions?
I personally never like to invest in meme coins. Of course, Pepe has been doing extremely well, and some meme coins like Pepe have tremendous amount of liquidity. So traders love volatility, and you get great volatility within some meme coins. And as long as you've got the liquidity, you can trade in and out really effectively. So I've got a friend who trades Pepe actively and does really, really well because of that volatility. So if you're going to include a meme coin, include one that has great liquidity like Pepe, for example. I'm really quite a conservative investor. I think there's great potential within even the top cryptos. I prefer to focus mainly on the top cryptos. So, of course, the ones that we mentioned already, we've talked about Bitcoin, we talked about Ethereum, we talked about XRP, we talked about Solana, and, of course, Toncoin is reasonably up there as well. There's 5 tokens already as a main holding within your portfolio. And then the other assets, again, it comes down to what, speculative ones which have potential to do multi-X. So I'm a bit concerned about a lot that fallen out of fashion partly because there's more and more competition and technology is improving and we have to keep up to date with the latest technology. So AI tokens are also another one you can look at. And of course, obviously I'm biased here, but our own token, which is EVE, it's only available at the moment on PancakeSwap, but EVE has potential because it uses the very latest AI technology. It's really good. It has an outliers program which identifies current movers in the market that you can jump into and jump in and out of quite quickly. So although EVE is actually nowhere at the moment, it's a low cap token, it's a low liquidity token, but it's one of those that you could put $100, if you can afford $100, to almost throw away, but just put it away, and potentially it could be multi-X in the future.
Matthew, are you looking for any tokens that are potential airdrops? And you didn't mention anything about the NFT, metaverse, or the gaming sector, because in 2021 rally, these were the sectors in the forefront. What's your view on that, very quickly?
I think we need to look at what is the current narrative, and I think that gaming tokens have great potential. I know there's been a lot of development, there's a lot of exciting ones out there, but I think you need to do your due diligence because there's so much out there that you need to identify which ones you have particular interest in. So play the game, have a look at it, see if you like it and if you think it has potential. NFTs, again, it's a past narrative. I don't know whether they're going to come back into fashion. NFTs are really useful, involved with other things like real world assets and so on. NFTs are useful within other kind of use cases as well. So I think NFTs will never go away, but they're past being one of the main narratives. And I think we need to look at the moment. I think the main narrative is AI. So I think we need to be focusing our sights onto the AI sector and identify tokens that use AI. And I think that's the future at the moment.
So Matthew, EY is your own token. Are you giving any airdrops for that, or if there is anything for the investors?
We'll see. We're currently been doing a lot of redevelopment. There's a lot of work going on behind the scenes. I don't want to give too much away at the moment. I do know another token called Tradestar. It's a perpetual DEX again. So that's another token which potentially I think there'll be airdrops going on there. Fantastic. And I know they're going to do a big burn in the future once they've done their capital raise. It's a small capital raise. Once they finish that, they're going to do a big token burn. So that's a new DEX. So I mentioned DEXs of the future. I believe DEXs will actually overtake the centralized exchanges like Bitcoin.
Fantastic.
So I'm looking around for DEXs as a potential investment opportunity. So as I say, Tradestar is one of those. I mentioned it before. I'll give more details in the 3.0 TV shows, in upcoming shows.
Fantastic. Thank you so much, Matthew, for giving a broad-based perspective about how the top tokens will do going forward from here on. And investors, they should stay away from the NFT sectors, gaming, and the small penny tokens that are actually picking up as a narrative, as a false narrative rather. Thank you so much for being part of this special interaction. Thank you.
Finally, not stay away, but keep it as a small part, speculative part of your portfolio. Have some exposure, but keep it small.
All right. Thank you so much, Matthew, for being part of this interaction. Thank you. It was a pleasure.
It's been a pleasure. Thanks so much. Bye for now.